Okay, so 20% or a fifth of the economic makeup of Singapore actually comes from factories like Dyson, factories like Silicon Box, who we spoke to earlier on. Alex, in your recent outlook actually of the growth in Singapore, we did highlight that the top line was impressive, 5% growth for 2025. This is something a lot of developing economies or emerging economies or frontier economies would kill for, actually. But you actually noted that the growth itself might have been a little bit uneven or perhaps narrowly driven. What did you mean by that?
So it's mainly driven by manufacturing, and in large part manufacturing of semiconductors and electronics. And over 2026, perhaps even beyond, we're probably going to see this continue, particularly in the memory chip sector. There's been an explosion in prices. There's very tight supply. Announcement recently that Micron was building a new $4.5 billion US facility here in Singapore. Just to scale that, that's about 5% of Singapore's annual GDP. So it's massive. But the problem is, you look around this factory, there's not many workers on the production line, right? So how do you ensure that you maintain your share of manufacturing, but does it produce jobs?
Yeah,
and does that flow through to domestic consumption?
That's interesting you bring it up, because Deputy Prime Minister Gan Kim Yong actually brought that up as well. Economic growth doesn't translate directly into creating more jobs sometimes, and we have to be vigilant. Again, what does Singapore need to do to make sure that growth is accompanied by jobs? Because again, this also feeds into inequality. This also feeds into making sure that people can provide for themselves or have access to actual employment and income as well. How difficult is it to make sure that the mismatch is there between growth and jobs, because it's not like for like, actually can be narrowed?
I mean, it's the fundamental question of our age, really. Like automation and AI, what's it going to do to jobs? What's it going to do to labour markets? What's it going to do to societies? I mean, it will destroy a lot of traditional roles, but it will also create a lot of different roles. So the government's role really is to preempt that and upskill people to enable them to take on those new roles that are created. So it needs to think about what skills are going to be useful in the future. They may be very different from what's needed in the past, and they need to help people to adapt quickly. It can be hard for people to retrain, but the government has kind of been putting in loads of policies to keep people continually learning, continually retraining, and continually picking up new skills. And
speaking of other risks also, we did talk about tariffs that seem to have not really made a dent on countries like Singapore. We've seen the non-oil export numbers of the last 4 months quite impressive, but there is a concern that this is from front-loading. There might be a bullwhip effect where you actually see a delayed impact of tariffs on countries like Singapore and other countries, manufacturing countries in Asia as well. Do you think that's something we're going to have to face, and manufacturing policymakers will have to face when they're talking about the fate of Singaporean manufacturing, that there might be those delayed effects from tariffs that might feed in and also hit the demand from factories such as Dyson, for instance? I think there will be a bit of a bullwhip effect from front loading. So last year, a lot of demand was borrowed from last year, pulled forward export orders to build up your inventories to get ahead of the tariffs. But we've done some analysis on this and tried to work out what was front loading and what was just kind of fundamental strong demand. And actually, over time, we've realized that a lot more was just fundamental demand than we expect. So the bullwhip from front loading is probably a lot less than we had originally anticipated back in kind of mid to late 2025. And there are some fundamental forces that means that the global trade is still doing pretty well. Global goods demand is still doing pretty well. So yes, it will be a bit softer this year. It's not going to get to the double-digit growth of 2025, but we don't expect a sharp contraction either. Okay, so as we heard from the budget last night, the Trade Ministry is expecting 2 to 4% economic growth from Singapore, which means it'll come down quite a bit from the impressive 2025. Does that match the calculations and estimates that you have right now for Singapore in 2026? Yeah, it's roughly in line. I think their previous estimate was a bit too low, and that's hence why they upgraded it, and we were above that kind of area. And just to kind of zoom out again, and contextualize it. Singapore is a country where GDP per capita is about $100,000 US. It's one of the richest countries in the world, if not the richest, right? And when you're very rich, it's very hard to grow. You're at the frontier, you have to push that frontier out. So a country like Singapore growing at 2 to 4% or 5% last year is really extraordinary. As you said, many developing countries would be very envious of these kind of growth rates.